Is the United States on the verge of a recession in 2025? It's a serious question millions are asking as warning signs start flashing across the economy. A shrinking GDP, growing trade tensions, and unstable job markets are stirring up concern from Wall Street to Main Street. But does a dip in numbers always mean disaster? Or is there more to the story than headlines suggest? In this video, we'll break down the latest economic indicators to uncover what's really going on. Let's get started. Understanding the current economic climate. The U.S. economy showed signs of slowing in early 2025. The gross domestic product, GDP, shrank by 0.3% in the first quarter, an early red flag for possible trouble ahead. This contraction wasn't entirely unexpected, but it raised concerns. Much of it was caused by businesses rushing to stock up on goods before new tariffs kicked in. That buildup made the economy look busier than it was, and when demand dropped, so did growth. While some areas like consumer spending and travel remained steady, many experts worry that these numbers could signal a shift toward weaker growth. Economists call this a technical slowdown, and while it's not a full-blown recession yet, it's close enough to make markets uneasy. It's a crucial reminder that one weak quarter can shake confidence fast. The impact of tariffs on the economy. In 2025, tariffs are adding serious pressure to the U.S. economy. New import taxes, like the massive 145% tariff on Chinese electric vehicles, have raised costs for both businesses and consumers. When companies pay more for parts, they usually pass those costs to customers, making products more expensive. This slows down spending and weakens demand. Exporters also face problems, as other countries respond with their own tariffs. Farmers, car makers, and tech companies are especially feeling the strain. While tariffs aim to protect American jobs, they can hurt trade and slow growth. The longer these trade disputes continue, the more likely they are to push the economy closer to a full-blown recession. Labor market trends. The labor market in 2025 has been surprisingly steady, even as other areas weaken. In April, U.S. employers added 130,000 jobs, and unemployment held at 4.2%. That sounds promising, but a closer look reveals cracks. Initial unemployment claims are starting to rise, and some companies are freezing new hires. Job growth is still happening, but at a slower pace than last year. If businesses expect lower profits due to tariffs or reduced consumer demand, they may cut back even more. Wages have also plateaued, making it harder for families to keep up with inflation. While we're not seeing mass layoffs yet, the signs suggest employers are becoming cautious. A soft job market often follows a soft economy. If hiring stalls, it could quickly spill into other areas like spending, investment, and housing. Consumer confidence and spending. When people feel unsure about the future, they spend less, and that's exactly what we're seeing. Consumer confidence, which measures how optimistic people feel about the economy, has started to drop in 2025. This is due to rising prices, interest rates, and economic warnings. People are cutting back on non-essentials like dining out, vacations, and big-ticket items. Even though some are still spending, they're doing so more carefully. Retailers have reported slower sales in electronics, home goods, and clothing. In a country where consumer spending makes up nearly 70% of the economy, this shift is a big deal. If households continue to pull back, it could further weaken business revenues, hiring, and investment. Confidence is fragile. Once it drops too far, it can take months to recover, even if conditions improve. Business investment and corporate earnings. American businesses are starting to rethink their investments. With the economic outlook becoming more uncertain, many companies are pausing new projects or cutting costs. Businesses thrive on stability, and right now, that's in short supply. Major firms like General Motors have already reported losses and revised their earnings forecasts. Rising costs from tariffs and slower consumer demand have put pressure on profits. As a result, some companies are delaying expansion plans or laying off workers. This pullback in business investment can lead to a chain reaction: fewer jobs, slower innovation, and reduced long-term productivity. It's not just large corporations feeling the heat. Small businesses are also struggling with higher supply costs and lower customer traffic. When companies stop spending, the entire economy can slow down, making recovery even more difficult. Stock market volatility. Wall Street has been on a roller coaster ride in 2025. Stock markets hate uncertainty, and lately, there's been plenty. After new tariffs were announced, major indexes like the S&P 500 and Nasdaq fell sharply. Investors worry about shrinking profits, rising costs, and a possible recession. Some are pulling their money out of riskier investments and moving into safer options like bonds or cash. Tech stocks, once booming, have taken a hit, while industries like autos and retail have seen their shares fall. This kind of volatility doesn't just affect the wealthy. It impacts retirement savings, pensions, and 401k accounts for millions of Americans. If stock prices stay unstable, it could damage public confidence even further. While the market might recover, sudden drops can cause people to panic and cut back on spending. Expert opinions on recession risks. Not all experts agree on what's coming next, but many are concerned. Some economists believe the U.S. is already in the early stages of a mild recession. Torsten Sluck from Apollo Global Management warned about a 90% chance of what he calls a voluntary trade reset recession. That means businesses are adjusting operations to avoid trade risk. Others, like Dana Peterson from the Conference Board, believe the economy still has strength and may avoid a full downturn. The disagreement shows just how complex this moment is. Some sectors remain strong while others are weakening. Whether or not we face a recession depends heavily on what happens with trade, inflation, interest rates, and global markets in the months ahead. One thing is clear: people at the top are paying close attention. Government and Federal Reserve actions. The Federal Reserve plays a key role in shaping the economy, and right now, it's walking a tightrope. Interest rates remain high to keep inflation under control, but that also makes loans more expensive. If the Fed cuts rates too soon, inflation might rise. If they keep rates high for too long, growth could stall. Meanwhile, the government's trade policies are adding pressure. Tariffs were meant to strengthen U.S. industries, but are creating new challenges. Fiscal policies like tax changes and spending plans also influence the economy's direction. It's a delicate balance. The Fed and government must work together carefully. Their actions in the next few months could determine whether the U.S. avoids a recession or slides deeper into trouble. For now, all eyes are on Washington and the Fed. Preparing for economic uncertainty. With the risk of a recession still unclear, being financially prepared is more important than ever. Start by building an emergency fund that can cover 3 to 6 months of basic expenses. Reduce unnecessary spending and focus on paying off high-interest debt. It's also a good time to review your budget and make smarter choices with your money. If you invest, consider spreading your money across different assets to reduce risk. Businesses should look closely at their supply chains and be ready to adjust if costs rise or demand falls. Staying informed helps you make calm, smart decisions, even in uncertain times. Preparing now doesn't mean you expect the worst. It just means you're ready for anything that comes. While signs of a potential recession in 2025 are real, it's not guaranteed. Economic indicators show both risks and resilience, and much depends on future decisions by leaders, businesses, and consumers. Staying aware and prepared is key to navigating uncertain times. Whether the downturn deepens or stabilizes, knowledge will be your greatest asset. If you found this video helpful, don't forget to like, share, and subscribe for more easy-to-understand updates on the economy and financial tips you can trust. Thanks for watching. Until next time, stay informed and stay prepared.